Hi guys, welcome to our financial accounting tutorial. In today's episode, we'll be looking at Introduction to Bookkeeping and Accounting Part 1. Introduction to Bookkeeping and Accounting Part 1. We're going to be covering the definition, uses of accounting information, importance of bookkeeping and accounting, and duties of an accountant. So grab your pen, grab your notebook, and get ready to learn. What is bookkeeping and accounting? Bookkeeping is a systematic recording of transactions on a daily basis in the appropriate books. The recording of transaction on a daily basis in the necessary and appropriate books. While accounting is the process of recording, classifying, selecting, measuring, interpreting, and communicating financial data of an organization to enable users make decisions. Unlike bookkeeping, where it is the daily recording of transaction, accounting is a little bit more. It involves more. Aside just recording, you need to classify, you need to select, you need to measure, you need to interpret what you've recorded and communicate it to enable the users make decision regarding their financial stance and all. So it's very important. Bookkeeping is also the process of recording data relating to accounting transactions in the accounting books. Not just any other data, but data relating specifically to accounting transactions in the various accounting books. There are types and various kinds of accounting books. We'll be looking at that in our next class, and more to come. While accounting, on the other hand, it incorporates measuring and reporting of profit and loss. The essence of every business owner or every company or organization is to make profit, especially if it's a profit-oriented business or organization, is to make profit. And every business owner will be interested in the accounting and finance of the business to ensure that funds are being used well, funds that are being disbursed properly, and the level of profit is higher than the level of loss, because the more profit comes into the business, the better for the management, and when loss occurs, it affects the business and affect the flow of income, and even staff will not be able to get the adequate payment or remuneration needed at the right time. So profit is needful for every business. Users of accounting information. The following are the principal users of accounting information. We have management, those who manage organizations' accounts and help them see that the financial records are up to par. Employees, owners of business, creditors, banks, competitors, analysts, the public, government, financial analysts, tax authorities, and many more. These are users of accounting information. And just like we know that accounting involves recording, selecting, classifying, interpreting, and communicating of accounting information to enable users make necessary decision. So all these are users of those information that I was explained earlier on. So these are the users of those information. The information gotten will enable these users make the necessary decision regarding the accounts or the finances of the organization and business. Importance of bookkeeping and accounting. Accounting information can be used for decision making, just like we rightly explained earlier on, that it helps users make a decision. So accounting information can be used for decision making. 2, it provides permanent records for all transactions. 3, it helps determine the profitability of a business concern. It helps to know the financial state of the business and the profit and loss level of a business or organization. 4. Accounting records are used for tax assessment. Accounting records are needed for tax assessment. 5. It helps prevent fraudulent practices. With the help of bookkeeping and accounting, fraudulent practices can be curtailed and can be prevented. 6. The records provide a means by which the finances of a business are controlled. It provides a means by which the finances of a business are controlled, and money that comes in and goes out are controlled, and how they are used, they are being managed and controlled with the help of bookkeeping and accounting. 7. Accounting records shows the income and expenditure of a business over a given period of time. So over a given period of business time, the income and expenditure, that is money that comes in, which refers to the income, and money that is used for expenses that goes out to sort out the expenses and all that are as known, and also helps the business to determine the level of expenditure or the level of expenses that has been done within that period of business year, and also income that has come in into the business within that specific period. 8. The assets and liabilities are shown by accounting records. So the assets of the business and liability are shown by the accounting records. So at the end of the term or the accounting period, the liability and the asset of the business are also shown by the accounting record. And this is the benefit of accounting and bookkeeping to any organization. Finally, on this episode, we'll be looking at duties of an accountant. The first duty we'll be looking at is maintenance of books of accounts. 2. Statutory audit. This is a situation where external accountants are brought in to help with financial record and data of the business. 3. Internal audit. This is a situation where an internal accountant do the necessary checks and ensure everything is up to par. 4. Budgeting. Accountant helps with budgeting. 5. Taxation. Investigation. Accountant also helps with investigation of financial record. And lastly, management advisory service. Accountant also helps with providing the management financial advisory service to help the management and organization make financial decision regarding the business. And these are the various duties of an accountant, and I believe you enjoyed this section. So see you in the next class.